This week's Bitcoin update is a little bit different than most. There's only one thing that's worth talking about, and it's the Federal Reserve. If we go all the way back to 2020, remember when pandemic hit? We saw the Federal Reserve step in and do 2 emergency rate cuts, and they put interest rates down at 0%. Now that artificial dropping of the interest rate, of course, incentivized people to come in and borrow capital, invest, and drive asset prices to the sky. Now, when that occurred, everyone felt great. We'd quickly recovered from a recession that started in Q1 of 2020. But as most things happen, too much of a good thing can be a bad thing. And we saw not only asset prices continue to go up and up and up into bubble territory, but we also saw consumer goods go up in price as well. That's where we got high inflation, which started in June of last year, over 5%, and continued to be over 7% by the end of last year. Of course, inflation has only compounded, and now we're sitting at over 8% on top of last year's 6 and 7%. And now the Federal Reserve, they've been talking tough for months. Been raising interest rates, they've been creating tighter financial conditions. But as many people thought in the last couple of months, asset prices had come down significantly. There's tech stocks that are down over 80%. Bitcoin's down 70%. Shouldn't the Federal Reserve be saying no mas? They're going to be done? Well, this past week, the Federal Reserve did another interest rate hike, 75 basis points. But not only was the interest rate hike interesting, but the comments afterwards is what I would be paying attention to. Fed Chairman Jerome Powell, he had very tough words. He talked a lot about pain, P-A-I-N. That word pain was a common theme. He's talking about pain in the housing market and the need for a correction in that market in order to get inflation to come down. He also started to talk about a previously thought strong labor market going to have to weaken. That's the only way inflation will come down. If you go back and you look over the last 9 or 10 months, the Federal Reserve has said over and over again, their goal is to destroy demand. Destroy demand sounds like a crazy idea, but they're actually being successful in it. Housing is coming down, unemployment is ticking up, and inflation has been particularly sticky. The Federal Reserve understands that they're going to have to bring bigger and bigger weapons to this fight if they actually are going to get inflation down. Now, you can debate whether they will end up being successful or not, but you can't debate the fact that they're committed to bringing more pain to the market. That pain tends to flow down to average citizens and to businesses, and so you should expect housing to continue to correct. You should expect interest rates to continue to go up, and you should expect more and more layoffs. That is not a good situation for a country that already is in a recession with 2 consecutive negative growth quarters of GDP. Ultimately, Bitcoin, it is a separate asset. It is outside of the system to some degree, but at the end of the day, the Federal Reserve is in control. It's all one big trade right now. Most asset prices, their correlation is going towards 1. If the Fed continues with their blunt weapons of interest rate increases and quantitative tightening, we are going to continue to feel pain in financial markets. That pain won't stop until the Fed waves the white flag and ultimately stops their current track. At that point, they'll pivot and we will return to a loose monetary policy. When that happens, though, is anyone's guess. If you're a Bitcoin investor, the most important thing to pay attention to right now is nothing in the Bitcoin market. It's simply the Federal Reserve. As the Fed has destroyed demand and they've brought all of these asset prices down, almost 80% of Bitcoin investors haven't sold their Bitcoin. They continue to hold, but it doesn't matter. The price continues to fall. We're now trading at below $19,000. That's because people realize the Fed means business and the Fed is committed. It'll be fascinating to watch this play out over the coming weeks and months. But listening to Jerome Powell openly talk about a weaker labor market, a housing correction, and pain for the economy, that's not exactly what you want to hear if you're long any financial asset. These weekly updates I enjoy putting together. Today is a little bit different than most because it's really just one big trade and there's only one thing to focus on. But every week we bring these to you in partnership with FTX. If you're interested, go click on the link in the description to learn more. FTX has super cheap fees buying Bitcoin, cryptocurrencies, sometimes as much as 85% cheaper than their competitors. They also offer digital stock trading with no payment for order flow or transaction fees. Go check out FTX today, and I'll see you all next Saturday for the next Bitcoin Weekly Update.
Hey you, did you like this video? Great, make sure you subscribe, like the video, and see you next time.